U.S. stocks extended recent gains to end higher on Thursday, as data showed the annual increase in U.S. producer inflation was the smallest in nearly 3 years. The Dow gained fractionally, while the S&P 500 added nearly 1%, and the Nasdaq jumped more than 1.5%. The Producer Price Index, which came on the heels of Wednesday's consumer price data, provided more evidence that inflation pressures were subsiding and helped support the view that the Federal Reserve may stop hiking rates after an expected 25 basis point increase later this month. But Shana Orczyk Sissel, founder and CEO of Banrion Capital Management, says while inflation cooled in May and June, it could reaccelerate in the coming months and cause the Fed to keep its foot on the gas.
If you think about a year ago, we had the hottest prints for inflation in May of 2022 and June of 2022. We saw month-over-month inflation rise 0.9% in May 2022 and 1.2% in June of 2022. So our endpoint bias here is giving us a pretty low inflation number, but we could see that accelerate in July and August because the comparatives from a year ago are going to be quite low.
Among the day's best performers, U.S. chip stocks rallied, with NVIDIA jumping nearly 5% to a record high, and the Philadelphia Semiconductor Index touching its highest level since January of 2022. PepsiCo climbed more than 2% after the company raised its annual revenue and profit forecasts for the second time. And shares of Google parent Alphabet gained more than 4% after it said it was rolling out its artificial intelligence chatbot Bard in Europe and Brazil, easing worries about overseas regulatory issues.
So when you think about the cracks that are in the economy right now, there are some positive things that seem to be driving the headlines, but underneath the surface, there are some things to be concerned about. For example, we saw a sharp increase in layoff announcements in April of this year. Layoff announcements are kind of a leading indicator because they make the announcement, but the layoffs don't occur immediately. So we tend to see the impact of those layoff announcements about 6 months later. Also worth noting is that corporate CEO confidence is showing that they don't expect to be hiring more people or increasing the labor force. They expect to see it shrink. If you look at consumer spending, a lot of it is being driven by the use of credit cards, which has reached one of its highs back to peak levels prior to the pandemic. So just something worth watching. While consumer spending has been pretty stable, what's driving it has changed from having excess cash to now using credit, and debt is rising. More importantly, we've seen the highest rates of corporate bankruptcies through May since 2010. We are on pace to have over 600 bankruptcies this year, which is notable. We've just had a lot of excess in the system, and so it's taking quite a bit of time to pull that excess liquidity from the system. Being done right now is we're trying to take liquidity out of the system because that is in essence what's causing inflation is excess liquidity. So as we remove liquidity from the system, the types of stocks that benefit from less liquidity are not the stocks that have been outperforming in the last 18 months. They're going to be things like energy, materials, healthcare. So 3 names that I really like right now are Southern Copper Corporation. This is a company that benefits from increased demand in copper. As we move more towards EV, there's greater demand for copper as EVs use more copper, substantially more copper than traditional ICE vehicles. Another name I really like right now is Leidos Holdings. This is a government contractor, cybersecurity, a lot of really focused security. They have market lead in security at airports. So the TSA, all of the machines you walk through, those are all Leidos. Lastly, another name I really like is Cigna. Again, healthcare. This is, covering medical needs, prescription benefits, trading at a substantial discount to the market, will do well regardless of the market environment and has some long-term tailwinds and demographic trends that are going to benefit their overall business. So those are 3 names I really like right now. And again, play into that idea of liquidity being removed from the system and doing well in an environment where there's less liquidity.